Hi, this is Claire Anhalt, and these are your self-storage market insights for March 2021. Aided by a COVID-driven boost in demand, self-storage remains resilient and fundamentals continue to perform well. For the fifth month in a row, national street rate performance was positive on an annual basis for both 10x10 non-climate controlled and climate controlled units. Furthermore, development activity remained stable across the nation in February. The strong performance of the storage sector continues to point to a positive outlook as we move into 2021. However, there is some uncertainty as to whether storage demand can maintain current levels as the core markets begin to recover, which may be a headwind for the industry in the future. Among the top markets tracked by Yardi Matrix, the Inland Empire saw the largest percent increase in street rates for standard size 10x10 non-climate controlled units in February, up 6.1% year over year. Looking at street rate performance for standard size climate controlled units, the Inland Empire also saw the largest increase in rates for 10x10 non-climate controlled units, up a substantial 10.5% year over year in February. As we saw earlier, self-storage properties under construction or in the planning stages nationwide accounted for 8.4% of existing inventory in February, marking a slight 10 basis point uptick month over month. While there were 17 storage projects abandoned from the new supply pipeline in February, development activity appears to be remaining stable nationwide, and most markets have yet to see a major decrease in their new supply pipelines. Despite an existing inventory of 7.5 net rentable square feet per capita and a robust new supply pipeline of under construction and planned properties accounting for 13.5% of existing inventory, storage in the Phoenix metro continues to perform well. Year over year, street rates for 10x10 non-climate controlled units in Phoenix increased 4.8%, and rates for 10x10 climate controlled units grew 5.7%. Despite its elevated levels of storage supply, strong population growth has helped Phoenix remain resilient to potential downward pressure on street rates. Between 2016 and 2019, the metro's population grew by 5.8%. Minneapolis was the only top market to experience negative annual rate growth for both 10x10 non-climate controlled and 10x10 climate controlled units in February. Year over year, street rates for 10x10 non-climate controlled units decreased by 0.9%, while rates for 10x10 climate controlled units fared even worse, falling 3.3% on an annual basis. However, street rates in Minneapolis for both 10x10 non-climate controlled and climate controlled units remained unchanged in February compared to the prior month, potentially signaling that the downward trend in rates may be slowing. A deceleration in negative rate performance would be a welcome scenario for area development activity, which actually grew by 50 basis points to 7.2% of existing inventory in February. Thanks for watching the video. Are you seeing these positive street rate trends reflected in your markets? Let us know in the comments. Thank you.